Good morning, traders. This is Chris from Elite Currency with a new video on the euro dollar and pound dollar. Euro dollar daily chart is making a pullback, or was it a false breakout? That's the main question right now, and price is testing a key level and zone of this downtrend channel, because if it turns right now, it could still continue with this downtrend, but if it breaks through this 113.50 level, I do think that this break below 113 is turning out to be a false break. In fact, there were already two daily bullish candles. That's already a little bit of a signal that the bears are losing control, are not that dominant as it seemed when we had the breakout. All right, so let's step back a little bit and take a look at the weekly chart here, and you can see that at this moment, if the candle closes anything like this at the end of this week, it's only Thursday morning, so we still have more or less 2 full trading days left. So we don't know how this weekly candle will end. But if it's anything like this, this is definitely looking like a pin bar. So we had the break of a key zone, right? But price is at the moment flying back up. Now, I'm not sure if that will continue like this, but at this point of view, if it does close like this, it would definitely be a false breakout and definitely indicate a higher chance of an upside. In that case, we had 5 waves down, and this is probably still part of that bigger ABC correction we talked about. That's the wave pattern and market structure that I personally favored before the break of 113. But then when the 113 break occurred, of course, then you got to think about the fact that price could be in a full downtrend. So far, the key level to keep an eye on from this perspective is 111, because if it breaks through 111, then this is certainly not a correction anymore. All right, anyhow, we don't know what the weekly will do. It is at a key resistance spot right now. It's making a retracement, but the price is above the 21 EMA, and that could be a little bit of a worry for the bears. So before I would trade it to the downside, it would have to be below the 21 EMA. It would have to close below it, because at this moment, HMA is up, 21 EMA is up, and it looks like price is making now a move away back to the 144 EMA, for instance, and certainly not in a downtrend at this point. If we put a fib from here to here, right, then it also broke above the 50 fib, and is, although there were some wicks here and some struggle, and there was a lot of volatility at that particular spot, it seems like price is pushing up at this moment. So from this perspective, I think that there's a bigger chance, or 50-50 at this moment, where we get a bullish breakout or a bearish breakout and a continuation to the downside. This 113.50 level is also, of course, a round level from a 50 point of view. So that's something you want to keep an eye on. I think that ultimately, though, if it breaks above this level, then something else is going on. It doesn't mean that that's a great trade to the upside, because we're running still into resistance if you put the fib from here to here. So the only way I would trade it if we get a break of 113.50 is if there's a break pullback like a flag, and then a break above that bull flag or triangle pattern for continuation higher, because in that case we have the break, the pattern, and a continuation. For downside, I'm okay with the breakout itself. I don't need a flag after that, although it could occur. We might get a break, flag, and continuation. Either of the two, the break or the flag break, would work out, I think, for a continuation to the downside towards 111. That's it for the moment, I think. 1 hour chart doesn't show much new. It just shows the fact that price is staying to the upside here, and it's even breaking above this resistance trend line and staying above the 21 EMA for the moment. So bullish momentum definitely at this point. And so far, the resistance levels have not yet worked. Although they did create these wicks, they didn't create the breakout as yet. So I'm waiting for, once again, bullish break, flag, continuation, or the bearish break below the 21 EMA. If we do get a bullish break, in that case, the target could be quite far. If we get a break above this downtrend channel, price could, in that case, all the way go back to the long-term moving average. Let me use a different template quickly here. There we go, which is, yes, if we get a break above this 21 EMA of the daily chart, there's a big space up to the 144 EMA. That is the minimum target we could expect of a wave C, if this is a correction ABC, ABC, ABC. So that's it could go further than that, but that would be the very minimum. So there's a good space here as well on the daily chart. Now, not much to say on the pound dollar cable besides the fact that it's moving erratic. It's probably because of the Brexit negotiations, and I'm sure that this particular price action will remain visible for the next months during this entire process of Brexit. If you see on the 1 hour chart, a lot of ups and downs here, right? Specifically in this part, pretty choppy price action between the weekly S1 and the weekly pivot point support and resistance. And the moving averages are going flat and prices in those. And every time price tries to break above it or below it, it bumps into support or resistance. So the moving averages are now flat. There's no momentum. Every time price tries to move away from those moving averages, it's flying back as a boomerang back to those moving averages. It's not able to pull away from it. There's no energy at this moment. And those moving averages are attracting the price, are like a gravity for price at this point. So it's very tricky at this point. And I would skip trading the pound dollar for the moment. I don't see any particular setups that I would like to discuss. But generally speaking, the patterns are, in my view, indicating a triangle. All right. This could be an A, this could be B, this could be C, down for D, up for E to finish at wave 4, and then down again for wave 5. Now, whether this is still a wave D or E or a wave C, that's difficult to read. I guess we're probably in a wave E is my best guess, and this is a wave A, B, down for C of that bigger wave D. So ultimately, I think that this is maybe the most likely, but could it be a little bit different, and could this be still part of C, and this could be A, B, C, and then it goes without breaking above this top, then go down for D? That's also possible. So it's difficult to read. I guess the weekly pivot point or break below the S1 will help a little bit indicate whether we get that bullish break or a bearish break. If we do get a bearish break, be aware that the target is very close, or the bouncing spot, I should say, is at 128, 127.50. That's really around the corner. So not interested in the pound dollar at the moment. Too choppy, too erratic, and too volatile at this moment. I don't see any clear setups for the pound at the moment. But it will be interesting to see if it breaks to the downside or upside, and then how it responds to support and resistance, because I do expect then, in that case, a move back into the triangle. All right, if you enjoyed that video, would certainly appreciate your review on forexpeacearmy.com. Thank you so much for your support, and wish you all great trading. Cheers.